Did you know that short-term interest rates are at the highest levels in about 22 years? You got to go all the way back to 2001 to find a comparable period. Despite this, there was a recent report from one of the major national banks that suggests upwards of 70% of individuals with a checking or savings account have not shifted any money to take advantage of these high rates. Well, today I want to show you 3 simple ways to accomplish this with virtually no risk. That's what we're talking about. Stick around. Now, I said I was going to give you 3 approaches to take advantage of these high rates. I might actually give you 4, but I'm going to give these to you in order of simplicity, so easiest to establish. The first thing we're going to start with is high yield savings accounts, and they are exactly what they sound like. They are a bank account. They are FDIC insured up to the applicable limits. But by and large, these are accounts that are only available on the internet. For example, what's up on the screen here, this is ally.com or Ally Bank. This is the platform that I'm using personally. I have been for a number of years. The present rate on this savings vehicle is about 4.25%. I mean, you can literally probably have one of these accounts open in 10 to 15 minutes, just going through their application process. And what you're going to do is you're going to link this up with your primary checking account, wherever that is. You know, most likely it's probably at one of the big banks, Wells or Bank of America or Chase. It's super slick. Once the accounts are linked up, you just transfer the funds and you're off to the races earning your 4.25%. The only thing you need to know about these is they usually limit how many fund transfers can happen per month. A lot of times it's something, I don't know, the most common I see is typically around 6, which for me is plenty, and for most people I know. There's a lot of different offerings of these types of accounts. Another one I've used personally is Capital One's 360 savings. They're actually a little bit higher today than what I'm earning at Ally, 4.3%. But all these things are pretty similar. For the heck of it, I threw up American Express. They also have one as well. But you can shop online. The rates are always going to be very close. All these banks are kind of competing with each other. But this is probably the simplest way to start. But because it's the simplest and there's no time commitment, you can transfer funds in one day and transfer them out the next, in essence. The rates are going to be a little bit lower than those 5% offerings, which I showed you on the chart when we first got started here. Now, if you really want 5% or more, the simplest place to start looking for rates in that range is your local bank. See where CD rates are. 12, 18 months ago, not a lot of banks were in this range, but now everybody is, because that's where the market has moved. So check with your local bank offering first. It's a good chance you're going to find it there. If you don't, a great place to look if you're willing to do a little legwork is this bankrate.com. It's just a very handy website for kind of shopping rates. You can see some of the big major financial institutions here where rates are. Additionally, if you have a brokerage account with, say, Fidelity, Schwab, Vanguard, on all those platforms, you can buy CDs. And in fact, I did an entire how-to video. I think it was probably already over a year ago. I'll make sure to link that in the top right-hand corner of your screen. So check that out if you want to see the actual step-by-step process for buying CDs through Fidelity's platform. That's what I'm most familiar with personally. Here's just a quick snapshot if you want to buy what's called a brokered CD, and that's just, again, buying a CD through a broker like Fidelity. And today, it's August 2nd. Here's a snapshot of where rates are for 1-year maturities. You can see JP Morgan and US Bank, 5.5 and 5.35 respectively. However, these ones are not call protected. And I don't want to get too far into all the lingo here. Check out that video that I linked. I get much more into the weeds, much more into the details about some of the vernacular here and what you need to know if you're going to purchase through a brokerage account. But CDs that you do know you're going to get the full rate are in that 4.25%, 4.3% range. So this is another handy approach, especially if you have cash sitting in a brokerage account. Now, the last thing I'll mention here is the most technical. This is probably for the little bit more enterprising individual if you're interested in personal finance. And this is buying short-term U.S. government bonds directly. So there's more steps in the process. You have to know a little bit of the jargon. But there's an added benefit. The interest or the coupon payments on treasuries are free or state income tax free. So if you're somewhere like me, I'm in the state of Minnesota, we have a relatively high state income tax. That's an extra benefit for buying treasuries directly. Now, let me just show you a snapshot of Fidelity's fixed income tool, which is where you purchase treasuries directly, just to kind of give you a sense of what you would see and where rates are. So these are issues that mature in roughly 1 year. You can see midsummer 2024. And here's the yield to maturity. It's roughly in line with the rates that we were looking at on CDs. But again, part of this yield is going to be free of state and local income taxes. So call it 5.3, 5.4%. Now, it's like I said, there's more kind of hoops to jump through. You got to know a little bit more. I did an entire video, step by step, how you purchase treasury securities through Fidelity's fixed income platform. And I'll make sure to link that, again, in the top right-hand corner of your screen if you're watching on YouTube. If you're watching on Facebook or one of the other platforms, I'll try to drop that in the comment section. Now, as a bonus to those of you who made it to the end here, I'm going to actually give you one more tip for earning, call it 5% give or take, which is about as easy as the first option we talked about. So this last option is by just parking your money in a money market account within a major brokerage firm. So for example, if you establish a money market or if you establish a brokerage account at Fidelity today, you're going to choose what money market you want your cash to sit. And one of their prime offerings or their main offerings is the Fidelity Government Money Market Fund. And you can see the yield on this today is just shy of 5%, 4.94. Now, these money market funds are basically just a pool of money that you would be a part of that own government securities. So instead of you having to pick individual treasuries like we were just looking at previously, Fidelity is going to do that for you. And likewise, Schwab, Vanguard, they're all going to have different flavors of this. Here's just a snapshot of where rates are on Schwab's various government money market offerings. Obviously, if you got $1 million, you get a little bit more interest. But my point is, this is super easy. There's not much to think about. It's much like that first option, like the high yield savings, where you just open the account, you park the cash, and the financial institution does it for you. Obviously, the difference is here, money market funds are not FDIC insured, so that's important to know, but you got to understand the underlying holdings, what's delivering that 5% is government securities. So there's not, any tremendous amount of risk here. All right, folks, again, short-term interest rates are at the highest levels in 22 years. Call it 5%, give or take. And I just gave you 4 pretty easy ways to take advantage of this. So get out there and do this. If you got any questions, as I mentioned, I linked or referenced a couple previous videos I did, which give step-by-step instructions for buying CDs or individual treasury securities. So you can look at those. And of course, if you got any questions, obviously drop those in the comment section here. I always try to respond. Anyway, look, thanks for watching. I hope this helps somebody else out there, and we'll see you on the next one.